All right, good and fine. So you're welcome this morning again, Ella. So what we're trying to look at is candles. We're trying to explain the candlestick, which I think we talk about the body, the wick, the open, and the close of the candle. We have defined candle already. That candle is the movement representation, starting from as low as 1 second to as high as the time can be able to be. So in this very particular today class, all what I want you to pay most attention is that that day we talk about bearish or bullish candle, which today I think let me just start with the candle afresh. Now, these colors you can change them the way you want them. Now, when you right click, even on your phone may be different, but on any system when you right click, you go to set, then you see them symbols, you see the candles now, the body, the borders, and the wick. So what it means here is that this green are candles that they are going up, and this red are candles that they are going. If I decide to change this one to black now, see what it has click on the other side. So that is this one is a settings that you can be able to set it on your own. So it's not something to bother about it. These are stuff you can be able to change them any color you want. But we use the green and red to know up and down. So that's how we arrive at this particular up green and down red. So we're talking about that any candle that will go up, which this was yesterday. You see on Friday, the candle drastically come down, which was red, and it opened where it opened up. And then when you put cursor here, if you're using system, anytime you put your cursor here, you look up here, you see O, you see H, you see L, you see C. What it means here is that O represent the opening price, which is here, and then the H represent the high, and then the C represent the close, and then the L represent the low of the candle. Likewise, when you put it on the green and any color of your choice that you may choose to be able to do it, you can configure these two on your phone. And which, if you by the time you download, because I think yes, you can be able to have a trading view on your phone, but it's just that it won't be that big the way you're seeing it here. Except if you turn your phone to be on a square that is the other way around, it will still not be that too big. So it's good to have system if one can afford one. If one cannot afford, can start with the phone, then gradually along the way, you can be able to have system. So that is how candlesticks are being open and closed. So your duty when you know the candlestick, you understand the opening and the close. Then the next thing we have to understand is that why some candle have wick and why some candle does not have wick. It's simple. It's just that you wake up in the morning and you were so tired. Why? Maybe because yesterday you overworked yourself. Or yesterday you took a long journey and then you discovered that you did not have strength to move further again or to do like you did yesterday. So it's just that when you picture this market, because as I told you, the market is being operated on fear and greed. That are the things that move the market. Fear of I will miss the trade and greed that I can be in here. So when you deceive yourself, you want to stay longer in the market then now take your money. And when you are afraid to enter, the market then now go your direction. So you have to quench those two things. So what it means is that you see some candles, some days, you see how it took how many days before we have this move. From Monday till Thursday, the candles were trading here. See what they were doing. Then on Friday, which is the last closing day of the week, it drastically come down. Now you see what this one is doing. When we opened yesterday, we a bit come below this particular low on Friday, which yesterday is the beginning of another new week. So when we come below it, what do? We drastically draw back. And what it means here is that it's showing us that there's weakness in price. That's the meaning of the week. Here the name. There is weakness in price that it is doing this and then it's going up here. But because of the way we are teaching and the way we believe in this market, that's me and my team, and we do not look at it as a demand and supply market. We look at it from an aspect of liquidity is what the market is looking for. Liquidity, what is liquidity? Liquidity is people money that the market is going to take or is going to sweep. So what it means is that there's liquidity we are talking in terms of, we talk about stop loss and take profit. So stop loss simply means people enter the market and they have a defined rate. So we discovered that this market leaves some liquidity here on Friday because this low here, there's some people that may have put sell stop that the market will continue from where it stopped on Friday coming down. That may be their belief. So they put a position here on this particular low here. And then the market, what is the market come? The market come and enter them into the market. And those types of positions, they will have their stop loss above because they want to sell the market coming down. They want it to keep on coming down. And what does it do? It do not end up coming down. It comes down small and activate their orders, which we call them pending orders. That is, you give a command to the market that when you get to this price, please take me into the market. That is a pending order. I'm not around. Yes, but anytime this market open, which it opened on Sunday, because this opened on Sunday, which was yesterday, Monday, we start trading from 11 p.m. Nigeria time Sunday to 11 p.m. last night to complete Monday 24 hours trading. And then from yesterday 11 till today 11 p.m. is the Tuesday trading day. So these candles have closed yesterday by 11, and then this one now opened at the same time because this one closed at 10:59. Now, earlier before now, the market, because we talk about times and season, earlier before now, the market do close by 10. But because you see this UTC -5, there is change in US time, which summer and winter in US they have to adjust their watch manually. That's why we do tell people Nigeria is a country that God have given as a blessing to a lot of people that one, you can stay here and make all the millions, you can still travel and make the millions. But in US, they have to adjust their wristwatch or their watches with 1 hour plus. Time is coming in the trading. It's only people that trade that do know this thing. They're going to adjust it back to -4, meaning that the difference right now with Nigeria and US is 6 hours against 5 hours that normally, and this start not up to 2 weeks ago. I don't think you came earlier before, you could have seen how we migrated from closing the market, the financial market, by time of by 10 p.m., by 9:59 to now 10:59. So that is the changes in time that you definitely have to pay attention to in addition to what we discussed about the time of the market, the opening and the close. Remember, US time, which is the New York Standard Time we use for the market movement. Why will we not use Nigeria time? It's not the Nigeria stuff. This is a global market. US is the capital of the world in terms of foreign exchange reserve. You can make research of those things. Those are just an information back you up to like, okay, you know this, but does not add to anything here, making money, not making money. So that is the way the candles behave. And then in a day, you see that the candle go to one direction. Some days you see the candle, so in 24 hours, there's a lot of movement, ups and downs. For example, if we are to come to 15 minutes, see what this market have done today. The market have done aggressively plenty movement since from the opening today. So you can see it here that this market opened today around which time? This was the time here, which was around 5. If we are to take it to Nigeria time, let me take it so that you see exactly what we're talking about here. This is Lagos +1. So in Lagos +1, you see that this was 11. This is when the market closed by, yes, because of this time. If we break it down to so that you see it very well, this is when the market closed around, this was a place here. Good. This is 22.55, which is 10 p.m. to 11. Then the market opened at 11 by these same hours. So that is exactly what I'm trying to refer to. You see here, this is the close, this is the opening price. So you discover that the market has not only go down since when it opened. You see, it has go down, it has come up. Now let's take it to 15 minutes so that we can be able to capture the whole of the today. I have some marked up if I do any markup now. So you see that today the market has drastically come down and they have went up and now it's coming down again. So you check the time. Why? Because we say the unit of destiny, as for life is time, the unit that moves this market is time. Time is the primary number one thing you have to study the time because the price moves based on time, not that time moves based on price. Why? You discover that right now there is serious transaction, though the belief of the majority of the people right now in the market. But we know that this market is not moved based on what? Demand and supply. So we know that this market is algorithmically being programmed to move this way. And I know why it's moving this way. Why did this market leave this place and come here? And then it begin to come down again. I know that there was something the market is looking for. Why? Because we talk about liquidity. And we say liquidity is that the market is going to look for people, stop losses, to stop them out, and then continue his initial move. You know, discover that people would have been selling coming down here. And then they were so happy that this market is coming down finally. And possibly they may have moved stock up to somewhere around here to secure some profit. Now the market has went and cleared those people, and then it start coming down again. Or the market may have come here now, but people, there is a lot of things that happened in the market. Every blessed day, there is ups and downs movement. So, but when we have a chalked up and down movement, like the market is just going up and down in one direction, it's not trending. You see, this is a trending market. When the market moves aggressively like this, it's trending. What we call consolidation the other day that I show you the example. The another name for consolidation is called high resistant liquidity run. We call it what? We don't call it resistant. Resistant were layman languages. I just wanted to begin to crack your brain as an early beginner. But as you go into the training and mentorship, you discover that we're going to be using some languages to substitute some languages. So when we say high resistant market, it means that the market does not go anywhere. It's just going up and down. When we say high resistance, simply because of what? It's not going into another liquidity in a direction. It goes up and down. So it means that we take both the buyers and the sellers out of the market and just keep on doing that. So we equally said that those types of markets, which I told avoid them. So high resistance markets, avoid them. How will you know? As time goes on, when you begin to study, you begin to practice, you get to understand that like this look like it's going to be high resistant market. This look like it's going to be not a high resistant market. So the trending market, like this one here, you see, it trend this money. So if somebody was could have been awake around that kind 12, maybe you could have been able to sell this aggressively. Based on my strategy, I could have been able to sell it here. This is about 60 to 70 pips, almost 70 pips. But I think highest I could have go for could have been 55 or highest of highest 60 pips based on what I'm seeing on the other hand, which is the left hand side of the market. Because you use what is in the left, you definitely see what may happen in the future. And that's why we're using this chart now. So those are some of the things about the candlestick. They represent the point direction and you can change the color to the way you want it. And then high resistance markets are avoided because you will maybe seeing plenty of ways you see the candles are moving one particular direction, they're moving up and down. And then low resistance market is the market that trend. Talk about the other day. Trend meaning that it moves in a specific direction for a group. So my mentor was telling us yesterday that because Trump win the election, may definitely be able to see some good movement come 2025 in the financial market. So we're expecting it in a very, very, very big and huge way. It's a drastical, low resistant run. So that is it for the candlestick. I think if I skip anything or if there's anything you do not understand, because I want us to be able to capture everything concerning the candlestick so that when we get into the market, and we can be able to begin to analyze properly. And another thing I want you to pay or take note of is that the week can run liquidity, but the week does not define the direction of the market. So you can weak somebody, like just mean normal weak, you know what it means to weak somebody. And you just scare the person, then you go your way. So that's another word for weak, right? Just like show some strength to somebody, and then you withdraw it back. You have weak the person body, or anyhow it be, you know the meaning of weak, and that's exactly the same thing. You know the meaning of body, you know the meaning of open, you know the meaning of close. So those are some of the things, and we start from 1 second to 1 hour to far has in ranges, meaning some couple years coming together. So I don't know, do you have any particular question concerning the candlestick before we move further, or you are okay, and then the times and the technologies in general, so that let me know where we can be able to get now. Do we?
Yes. The only thing is, I think yesterday or day before yesterday, I was trying to practice like this thing you've been teaching.
Yeah.
I was trying to get like a demo account, but
Yeah.
I got stranded. I just left it.
Okay. Is
Like I
that all?
needed to, yeah, that's all. I don't think I have any question right now
Okay.
because I know I'll have a lot of questions much later, but for now, no.
Okay. And in that case, you were running faster than your shadow, because we have not get to where we talk about the demo. But though it's a good move, it's a simple thing. What you just have to do, if you want to start the demo, which I advise, then maybe you wait and watch at least this week. Then by next week you can get a demo account. So I think by
Okay.
Thursday, is it Thursday, right? This Tuesday. By
Yes.
Thursday, when we round up the class, then we're able to discuss how you get a demo account, so that by next week you can be able to start practicing. And then, because right now, even when you have a demo account, what I would do, if you down click buy or sell, you're just gambling, because you do not have a defined reason of why you enter the market. Another thing that you have to take at the back of your mind, which is the things we have to enter right now, is mindset. Here, or in general in life entirely, we said, my mentor have said it, I've checked it, I said that 95% in life generally mindset. Whatever you want to do, then it is 5% strategy. So now, what is the mindset of a trader? A mindset of a trader is somebody that is not trying to make the world money again, but is somebody that is in the game of making money. And at the same time, you should be number one, be responsible for whether the trade become positive or negative. And that is why you must have stop loss. And that is why you must have take profit. And that is why your risk management must be intact. If I have $100 and I lose $2 or $5, I am done trading for that day. What does it imply? It implies discipline. And what is discipline? Discipline is ability to give yourself a command and you follow it. And the only way out of this trading of the thing, number one, is discipline. And number two is risk management. Without those two, we can spend 1 million years here and we will end up losing money over and over again. And secondly, I can give you a trade. Me and you will enter. I will end up making, will end up losing. Why? Mindset. So you must have a mindset of, okay, this is what I want to do. And when I get this done, I am done. Why? This market has a way of proving or telling to you, you can make $1 in 1 second, in 1 minute. I'm serious. There is some currency pairs that run. Now, let even just say, do you see this move from here? If I could have been trading this morning now, this is about 40 pips, and this is where my take profit would have been about 50 pips, which in less than 2 minutes now we hit. Now, with this very particular 55 pips, which I told you, which we're going to look at, I think I remember now. With this particular 55 pips, it depends on your lot size. Somebody can make $1 million, $5 million, $10 million on this particular move. Somebody can make $1, $5. Yes, it depends on the capital the person has and the risk management of the account. When you know that risk management is key, what you only acquire it through discipline. So you definitely have what? Have a defined reason why you enter. So that at the end of every week, what you do is that you do what we call revision. This is school. There's a boy that came to me, I think. It's not even answering me again. You pay me money and I'm texting you, you're not answering. Why? Because people think maybe there's an easy way out there. No, there's no easy way out there. I write not like as if I'm in primary school when I'm trading, not even when I'm learning. When I'm learning, I have a lot of notebooks here. I think not even these mostly books. My books are from 80 leaves, those big, big overcover books. I took note like as if I don't, and this note, I'm not taking them for taking granted. Every weekend, I go through the note and the trade, right? For example, I could have taken trade here, or I buy here, I do whatever. I must have reason why I buy. We call it what? Journaling. So you have to have the mindset, not a lazy place where you come and pick money, go home and eat. No, there's a work here to be done. Number one, when you wake up in the morning, you want to start trading, whether it is game, whether it is just to observe the market, you have to write it down. You can write it on the screen, but if it jumps up, why not write it in a notebook? When I wake up, I came to this social time. Remember, time is the number one ingredient that moves the market. You see what the market is doing right now. In your present, right now, right here, you're seeing it. And I told you, if we could have talked about strategy, I could have shown you how we could have entered this market and we could have been in this move. Why? Because I am seeing it clearly now, but you cannot see it. And even when you see it, you could have said, hey, it's going down, let's sell. Where do you sell? Do you sell at premium or you sell discount? Do you sell when the market is start going down or you sell when it's going up? Why? Because when you know where the market may likely go for liquidity, you easily take a position, but does not guarantee you skip your risks. No, you take note that, okay, I wake up and by so time that the market do this and this, I took this buy with a lot size of so at the risk of so with a target of this. You close your notebook. And if you want to stay in the presence of the chart to manage your state, fine. At the end of the day, you write your summary. At the end, we were able to take partial, or we were able to hit take profit, or we were able to hit stop loss. Lesson learned, you put them down. So you're done for the day. At weekend, you then now review and see where you make mistakes because you can still come to the chart, which may not take up to 2 hours. Okay, you have your entry point, you just put them, this line here, all of them are representing price, not that they are just random. They are at a particular price. So when I come to do revision, I then now say, okay, at social price, this was what happened. At social price, this was what happened. So all those things are things that one has to begin to get them first before even talking about how will I buy and sell. You have to get the defined reason of why you buy and sell down. So that at the end of the day, you take responsibility. You don't blame anybody. Because when you start, somebody said the devil become the world leader before Jesus took it from him. Because when God asked Adam, why do you do this? Shift the blame to the wife. And when God go to the wife, put the blame to the Satan. And Satan do not blame anybody. And he take charge of the universe until Jesus comes. So when you shift blame to people, you shift responsibility to them and you become irresponsible. Not about my mentor, it's not about strategy. Why? Because I know that I will lose 5% and I'm done trading. I know that if I make 10%, I'm done trading. So I have those things written down, and those are what? The discipline rules that I set for myself. So those are some of the things that definitely you can be able to put them down and be very, 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 very conscious of them. Whether you're losing or you're making money, journaling, taking notes is a must to be a successful trader. It's a must. And every weekend you review it or you review it. So those are some of the things you see. And this market is moving to where? Liquidity is moving to particular places. So you remember that what we define is that the market move looking for what? Liquidity. And the market move creating what? Liquidity. These are the two things the market is moving for. Either is showing people, deceiving people, or is going to take the people that are in the market out of the market. So I believe I'm able to pass through some very key points there concerning liquidity and concerning why the market is moving. See, there's another liquidity here, and definitely the market want to obstruct the people because they want them out of the market. As yesterday people, not even today people. So those are the stops that keep the market going and moving up and down every blessed day. But it have a direction at the end of the day. Or it have weight and body small, where you saw some of the candles the other day. So now, all these things here, they are useful. Now you see this one called I carry it close is for me to be able to see all of this. But you can, if you have system, these are things you may study them just to know. You click here, you see a lot of them: trend line, ray, info line, trend line, trend line, the horizontal line at this point. See them? Those are the horizontal line. Then the one I mostly use, not even horizontal line. One I mostly use here. So what will bring me here normally to carry horizontal ray. Horizontal ray is what I normally use. What is that one? Anywhere I put it, it starts from that particular place, then it go further into. So those are some of the particular things I have been using. And then this one, just you see, this is rectangle. Here you can see plenty of them. Sometimes brush, highlight. They are just for your flexibility of use. So, like for example, now, I was telling you, if I'm to sell, I see a perfect opportunity here to sell here. This particular place would have been a very good place to sell there. Why? You get to know why I'm throwing all of this. You see, these are some of the things that they were here before we started class. So definitely as time goes on, I'm going to know why I'm throwing all of these particular things. And I'm using what? Red tank. And this particular one here is called Fibonacci retracement. What is this one? This is basically just for measurement of because a lot of people use it for some stuff, which we're going to use it to maybe for entry and a lot of other things. So you see where the market is coming to, as I said it earlier, this is where the market is coming from to obstruct this liquidity here. We don't want to allow these people into the market and see that disrupt them already. Now, these people, there's millions of dollars here. Then this particular one is a measure. This particular one icon, like this, all this thing you people do put emojis and a lot of other things like that. You can pick anyone, put it here like this. See them here. All of these things are just like normal things that they are on the phone too at the same time. So that is it. And then this particular one, mostly I don't use them. This one I use it because for measuring, for example, if I want to buy or sell, want to know, or maybe I just want to like put it here like this. You see, anytime I put any drawing, all of these stuff come back. This is just a measurement tool for buy and sell. I want to know how much I'm risking, and then how much am I going to get at the end of the day. So those are some of the things you can equally be able to take advantage of. But all these ones they will come through practicing. If you have systems, just use them and see their measurement. But this is measure your pips, as I said the other day. Call what? Measure. So when you click here now, you see, it have given you almost about 95 feet. That is how it works. You can be able to use this thing. So if I'm put up to sell, I for sell for 100 feet. See, we have already obstructed people in the market. Already. So that's some of the this thing. See where the market now, what the market is doing. Then we have this one is text. Maybe you want to write anything. As you see me, I was writing the other time. So those are some of the things. I think from here, where you want to zoom, which I think is not even necessary here because you still have them. So not really. And then if you pick anything that you don't want to drop, you can click here, it drop. So there's a lot of space things here. See them here, you can play with them. You have laptop. I think they're even on the phone. Fibonacci, you see them here. You only use Fibonacci retracement. So I will show you maybe much later or tomorrow how you can be able to program it and how I I make use of it. So you can see this equally can be calibrated. Started from 0 and then 1, which is 100. And this particular one I do not really see. I will show you all of them as time goes on. So you see, aggressively, this market is seriously moving this morning. I think it's a heavy move this morning. Serious one. Is there news? I don't really know. This market have moved while we're here. Now see what I was telling you. In our present now, this market have moved about how many pips? Over 100 pips. This is 9. So even let's just say this one can do, it has moved how many pips now? That we are just talking here. Why I told you coming here. They have now come and reach here. So you see, right now in our present, this market have moved about 110 pips and it's still moving. So we talk about Forex calendar, which is very important. If we have to check the calendar to see whether there is news, which is the first thing you do when you wake up in the morning, to know where you are going, whether the market is going to have a high liquidity run or a low liquidity run. So today is what? Today is Tuesday, 2:30, which is in US. See, 2:30 is 2:30, which is 8:30, and then there's Tuesday. That's the only news I think we have. 2:30 there was building permit, which has already been. So they took some. There is definitely may be some news about or somebody is talking. Sometimes the market can move the way it wants to. But what I know why it's moving like this because of this liquidity here, and then it has equally taken here. So we discovered that the market moved looking for what? Liquidity. So when you know that this thing is going to happen beforehand, then you can be able to position, as I told you earlier. So now I discover something. If I come back to daily now, discover that this market has already massively. I saw somebody that do give people signal regretting what the market is doing. Why? This morning they have lost both buy and sell. They entered twice, the market kicked them out and in. You see what the market has done now. It have come back today, yesterday low and Friday low. They have break them down. So I saw him now just send a message on Telegram saying, they are regretting this and that. That is what law. They have gone. They did not really understand what they were doing or they were rushing to end. But I saw this entry clearly while you were here. I saw this particular entry here clearly, even though there was an entry here, but I saw this entry clearly, which I think if I could have entered as of then, it's seriously, it's about 150 pips. That's serious, 150 pips. This can buy a fence, can build house. I'm telling you, depend on the capital the person has. So you see, after he has fulfilled his assignment, see what the market is doing. So it came looking for what.
Sorry, that particular thing that you drew there, you said that can buy a house and depends on the capital.
Yeah.
So let's say one puts in 100,000 naira and
100,000
then
naira cannot buy. Now, this is another good thing I want you to understand. It's just that the Bible
okay,
says you shall reap what you sow. You cannot sow one corn and expect to harvest one trailer. No. Harvest, what we're talking here is that, to be sincere, there's people that trade with $1 billion, 10 billion. The market total, as I told you, is about 7.something trillion dollars. That's the cap. Our timeline is coming to an end. So I think I'm going to send you another link and continue from there we stop. Because I think we have do the basis. So maybe we just start small and answer those your question and then we call it a day. Is that okay by you?
yeah, that's fine.
Good and fine. So let me send you the second link.